Well, hi and welcome back. Today we're taking a look at an alternate version of exercise 1-9 from page 35 of the textbook. This is chapter 1, introducing financial statements, and this problem is taking a look at how to use the accounting equation. So the problem asks us to answer the following questions using the accounting equation. And the first one says, at the beginning of the year, Chan Company's assets are $282,000. and its equity is $211,500. During the year, assets increased $80,000 and liabilities increased $45,000. What is the equity at year end? Well, before we dive into the problem, let's recap from exercise 1.8 video. In that video, we were introduced to the accounting equation that states that assets equal liabilities plus equity. And we said another word for assets, well, those are economic resources. And at all times, the company's economic resources must be equal to what? The claims on the resources. Yeah, and there were two types of claims, do you recall? Well, one was creditor claims and the other were owner claims or stockholder claims, also known as stockholders' equity. So recall from that prior problem as well that we said, well, let's say you want to buy a car for $10,000 and you had to borrow $8,000 from the bank and $2,000 is what you had to put down on the car. So the balance sheet equation was in balance. You had assets of $10,000. You owed the bank $8,000. That's the creditor claim, somebody you're liable to. We just call those liabilities. And you have a $2,000 owner claim. That's your owner's equity. Well, let's say you started out the year with this car and this bank loan and this amount of equity. During the year, you decide to buy another car. You bought another car for another $10,000. So by the end of the year, what were your total assets? Well, they had to equal $20,000, right? Well, let's say that at the end of the year, you get your bank statement and the bank says, you know, you borrowed more money from us. You paid a little down too, and at the end of the year, the total amount that you owe the bank is $15,000. Well, what is your equity in these cars then? Well, we just simply use the balance sheet equation and take $20,000 minus $15,000, which means our total equity in the cars must be $5,000, right? So then, well, how much did your bank loans, your liabilities, how much more liable did your company become during the year? Well, let's see. I had $15,000 in liabilities at the end of the year, $8,000 at the beginning of the year. I guess my liabilities increased by the difference, or my liabilities increased by $7,000. Well, what about your owner's equity? How much did your owner's equity change throughout the year? Well, that's the same logic. If it was $5,000 at the end and $2,000 at the beginning, the difference must be the change in my owner's equity, or $3,000. Okay, so the balance sheet equation states that economic resources is equal claims on those resources. The beginning balances plus or minus changes throughout the year will equal the ending year balances. So let's go back and take a look at problem A for Chan Company. We have the balance sheet equation, and at the beginning of the year it says Chan's assets were $282,000. Now its equity at the beginning of the year was $211,500. So can we solve for what liabilities were? Well, sure. We just take 282 minus 211,500, and liabilities had to be $70,500. Now during the year, Chan's assets increased by $80,000, and liabilities increased by $45,000. Well, that must mean that equity also increased throughout the year. How much did equity increase by? Well, just take $80,000 minus $45,000, and equity must have increased by $35,000. Alrighty then, so what is equity at the end of the year? Well, let's go back and total things up. So at the beginning of the year, assets were $282,000. They changed by 82. So what are assets now at the end of the year? Well, just 282 plus 80, or assets have grown to $362,000. What are liabilities at the end of the year? Well, they were $70,500. They grew by $45,000. So what are total liabilities now at year end? Well, it's $70,500 plus $45,000, or $115,500. So equity, we can get this a couple of ways. We could either take 362 minus 115.5. Well, that would surely solve for equity. Or we can take 211.5 plus 35,000. Either way, equity is going to come up to the same thing of $246,500. Okay, let's try another one. Let's take a look at Part B. Part B says Twitter has assets equal to $150,000 and liabilities equal to $40,000, and both of these are year-end balances. What is the total equity for Twitter at year-end? Well, the balance sheet equation, plug in the information we know. Assets equal $150,000. Liabilities are equal to $40,000. Take 150 minus 40, and equity has to be equal to $110,000. Let's try one more. Let's take a look at Part C. It says, at the beginning of the year, Pandora's liabilities equal $100,000. During the year, assets increased by $40,000. At the end of the year, assets equal $230,000. Liabilities decreased $25,000 during the year. What are the beginning and ending amounts of equity? Well, we put up the balance sheet equation. We just plug in what we know. So at the beginning of the year, assets we don't know, but we do know that liabilities were how much? $100,000. Next, they say during the year, assets increased by $40,000. So the change for assets was 40. Liabilities decrease, and assets at year-end, were $230,000. Liabilities decreased $25,000. Well, before we even get to liabilities, can we plug in what we know assets have to be? Well, sure. $230,000 is what we had. Subtract out the 40, and beginning assets had to be $190,000. Let's move on to liabilities. Liabilities were $100,000 at the beginning. They decreased $25,000, so liabilities at the end, well, that has to be $75,000. Well, now we can fill in what equity is across the board. We can, if we want, determine what beginning equity is. Well, that's what's asked in the problem. So we have assets of $190,000, liabilities of $100,000. Well, what does equity have to be? $190,000 minus $100,000, equity has to be $90,000. That means that the change had to have been in equity of $65,000, because $40,000 minus a negative $25,000, well, that becomes $40,000 plus $25,000, which equals $65,000. Last, we're asked to determine what the ending equity is. In a couple of ways we can approach this: 230 minus 75 or 90 plus 65. Both will give us the ending equity, and the ending equity in this case is $155,000. Okay, so now we know what beginning equity was and ending equity was, and that's a quick look at solving exercise 1-9.